Your bank offers you a credit limit increase. Should you take it? I've got a new guest and we're going to discuss it starting right now.
This is Debt Free in 30. Here's your host, Doug Hoyes.
Today's topic sounds like a no-brainer. If your bank offers you a credit limit increase on your credit card or your line of credit, you should obviously take it, right? Well, we're going to discuss it, but let's start by meeting our guest. Who are you and what do you do?
Good morning. I'm Mark Borysiak, and I'm the trustee in the Barrie office for Hoyes Michaelis.
I already knew that because I've met you before. And you were actually on the podcast, episode number 386, and that was one where we had a bunch of our trustees from across the province on. It was called Ontario Debt Experts Discuss What's Happening Right Now. So this is your first appearance here in the studio in lovely downtown Kitchener. So let's talk about this here, because I got my own theories. You got your own theories. We'll discuss who's right here. And for those of you watching, Mark is actually taller than me, so it's not like our chairs are adjusted. We were discussing that before we started here. I thought he was like 6'7". He thinks he's only 6'3". So for our paid subscribers, we're going to measure him afterwards to see how tall he actually is. So, okay. Here's the obvious answer to this question. If the bank offers you a higher credit limit, you should take it. And you know how this works. You get a credit card, you've been using it for a while, and you look at your statement, oh, my limit's gone up. It used to be $5,000, now it's $8,000, now it's $10,000, whatever. And it's pretty obvious why the bank's doing that.
Exactly, more money.
More money for the bank. So that's pretty simple. So the obvious answer is, well, if the bank offers you more money, number one, they think you're good for it. And number two, you should take it because you never know when you're going to need it. I don't know if my car is going to break down tomorrow or if something else is going to happen. So I'm better off taking it now while they're offering it rather than waiting until 6 months from now when maybe things are a little worse. Maybe I've been laid off from my job. I need access to some credit. And I go to the bank and I apply for a higher limit. And they say, oh, you're not working now. We're not going to give it. So you're better to lock it in when things are good. Makes sense, right? That's our show. Thanks for coming out. That was Debt Free in 30. Please like and subscribe on YouTube. Obviously, though, there must be a downside to raising your credit limit, or else we wouldn't be having this discussion. So you give me the downsides. What is the downside? And again, you're a licensed insolvency trustee. You're in our Barrie office. You're meeting with a bunch of people every day. And virtually everyone you meet with has credit cards. Mm-hmm. It's well over 85% of our clients have credit cards that they are unable to pay. So tell me, what's the top downside that pops into your head as to why you should not be just willy-nilly increasing your credit limit?
Well, when you get the credit limit increase, obviously there's the risk you're going to use that credit limit increase and overspend outside of your means.
Yeah, and everybody thinks, no, I'm going to get the authorized limit increase, but I'm going to just leave it there.
That's the plan.
But so what causes you to spend it when you didn't expect to spend it then? What are the unanticipated things that come up to bite you?
Well, I mean, everything happens in life. So you could have an emergency. Let's say you get a flat tire on the side of the road. Tow truck, you need a new set of tires. Now you're into your credit limit you weren't planning to. Now you've got to come up with the funds to catch up those payments. Or maybe it's the summer and you want to do some backyard spending and you go buy some patio furniture, something like that to put on the deck, things like that you're not thinking of. But with that extra credit limit and the credit availability, you can slowly start dipping into it.
And so when you start dipping into it, what happens?
Well, now your minimum payment goes up. And that first payment, as everyone knows, is not as bad. But then the month after, it's just getting a little bit higher. And then if you're not making the full payment, all you're doing is giving money to the bank each month. Interest.
Mm-hmm. And that's the unanticipated consequence of it, that I've spent more and now I'm paying the interest, but also my minimum payment's going up. So from a cash flow point of view, it's a problem as well. And then that leads to people having trouble paying off the debt then. And you see that all the time, I assume.
Unfortunately, yeah, because it's not the one critical amount where you go get a $5,000 increase and you spend $5,000 at once. It's incremental. It's a little bit more. You don't have the cash flow, so you're making the minimum payment, and that balance is just slowly getting higher.
And that's really the problem with this. It's kind of insidious. It creeps up on you.
Exactly. The banks, I mean, they know what they're doing. They're giving you that credit limit for a reason, to make money off of you.
And they're not giving you that increase if your situation in their computer looks bad.
No, of course not.
And so who is the person they're giving that increase to then? It's someone who's always paying their minimum, someone who's
making their payments, always on time, has a good credit score, maybe not right at their limit, but kind of close to that limit where the bank says, hey, maybe there's a little bit more room that we can grant them.
Yeah, and we don't know what the exact algorithm is, because if we did, we'd tell people and everyone could game it. But I'm sure there's a sweet spot for the bank.
Yeah.
So somebody who is right at their limit all the time, yeah, we don't want to give them more because it doesn't look like they can handle it. Someone who pays their balance in full every month, well, I guess it doesn't matter if we increase their limit because they're not going to use it. But that person who's carrying a minimum balance, maybe they're at 10, 20, 30, 40% utilization. Okay, that's the sweet spot right there because we're making some money on them. And then we increase the limit. Now we can make more money on them. So Ted and I, you know Ted Michaelis, right? You know who I'm talking about? We did a podcast a while ago about the wealth effect. And I think it was actually about the negative wealth effect. And I am of the view that when I have a higher authorized limit on my credit card, I feel wealthier. Is that something you see in your clients as well?
100%. You have this false sense of security that you have the access to the credit. You can spend more. So why not spend more if you can? That's the entire idea. And it might not be big increases or big spending, but it can just lead to little increments over time.
Is credit wealth?
No.
They're different sides of the balance sheet.
Yeah.
So, but it makes us feel wealthier.
Exactly. Because you have access and the ability to spend, although you're going to have to pay it back at some points.
But I've got access to it now. And I think that's probably the most challenging thing to get your mind around, that having access to credit is not the same as having money in the bank. And I understand a $10,000 credit limit and a $10,000 bunch of cash in my savings account, it's $10,000. I can spend $10,000 either way, but you already hit the nail on the head. You got to pay one of them back plus interest, and that's where you get nailed. Okay, so those are kind of obvious risks to raising your credit limit. You spend more, you end up paying more interest, you end up with a higher minimum payment, and then you have trouble paying off the debt, and it gives you this false sense of security that I've got more access, I should spend more. But again, I got to give both sides of this here. I'm not going to let you just, because you're tall, railroad me here into this. If I get a higher credit limit, but I don't borrow more, okay? So I still pay my balances off completely in full every month. I'm not spending anymore. I'm not borrowing anymore. Is that not going to help my credit score?
It might. I think the answer, like a lot of things, is going to come down to it depends, because if your limit goes up, your utilization ratio is going to go down. So it's going to look good to the banks again and on your credit score. But there's always that risk, though, that you still have this higher access to credit.
So explain what you mean by utilization.
So utilization would be the amount of credit you're using month to month compared to what you have available. So if you have a $10,000 credit card and you owe $1,000, you got a 10% utilization rate. So if you have a $5,000 credit card and you owe $1,000, 20%. So the 10% looks better than 20%.
And what is the ideal utilization rate?
Probably zero, not carry a balance.
Yeah, I'm of the same view, zero. Although there are gurus on YouTube and the interweb who would say, well, no, you got to have some kind of utilization to show that you need it, because otherwise they won't give you more. And the banks like you more if you're utilizing some. And sure, the banks like you more the more you're utilizing, because you're paying more in interest.
Exactly.
But I am of the view that zero is better than any other number when it comes to utilization. Now, how do you get to zero?
Pay your full balance every month.
And do you believe in paying it more often than every month, or is monthly sufficient?
I believe doing what works for you. And for a lot of clients, I find that paying it as they use it does seem easier. This day and age, like cell phones, computers, it's not like the 90s where you wait for your statement at the end of the month. Use your card, go home, pay it as soon as you can.
How old were you in the 90s? You're making stuff up here because you were like 7 years old or something, probably in the 90s. I was actually working in the 90s. I had already graduated from university then. So yes, I totally agree. And so there's a couple of different strategies there. Mm-hmm. One strategy is to say, okay, I'm using my credit card as a substitute for cash.
Yep.
Or instead of using my debit card. And then I'm going to go home and I'm going to go on my app or whatever and just pay it. Why would I not just use my debit card then? Why would I be using my credit card instead of my debit card?
Well, I mean, it does help build your credit when you use your credit card because you're using credit. So it shows credit utilization on your credit report, which is what the banks like to see. If you're doing online shopping, usually credit cards are more secure than debit cards as well. So there's some security factors with the credit card.
What about points?
Points is a good one too. If you're shopping points, I don't know if there's air miles anywhere anymore, but yeah, points.
Yeah, I think they got bought out by somebody else and they still exist or something. But yes, well, not every, but there's tons of credit cards out there that have rewards.
Cash back, groceries, whatever you want.
And so, okay, if I'm going to be paying it off in full anyways, why not get the points, the rewards, the cash back, the groceries, whatever it is? And like, what's the downside to that? That sounds pretty good to me.
As long as you're paying your balance. I think that's the key is if you're using the card and paying it as you use it and you don't carry a balance and you have that 0% utilization, then that's a good plan.
Yeah. And the risk is that I don't pay my balance. But the other risk is, if I buy this, I'm going to get that many points, this much cash back, this many air miles, whatever it is. So I end up spending more.
Exactly.
And that's, again, the worry. You always got to think about what's going on with the other guy here. Well, the other guy in this case is the bank, the retailer, whatever. They want you to spend as much as you can.
Yeah, when you get those emails, go buy X and you'll get those Y points. There's a reason for that. They know what they're doing.
Yeah, they're not just doing it to help you out. So, okay, so back to this issue of the credit score then. So if I increase my credit limit but don't use it, I'm improving my utilization, which is the percentage I'm borrowing against the total. So that would be a reason to increase my authorized limit.
Possibly, yeah. If you want to lower your utilization rate,
then that would be a reason to do it. And the utilization rate is not calculated. Well, you don't know what day it's calculated on in the month.
No idea.
And it's different for every bank, but it may be different based on when the potential lender is pulling your credit report.
Exactly.
So they pull it today. Well, the computer calculates it today. So I've got a credit card with $1,000 limit, and every month I put $1,000 on it, but I pay it off at the end of the month. That means the day before I pay it off, I'm at 100% utilization. Mm-hmm. So, and it may be that, well, I fill up my car with gas and I buy my stuff and whatever, but I got the money and I pay it off in full. I'm not paying any interest. Yeah, but your utilization at some point in the month could be close to 100%. And I guess, okay, that's a reason to get a higher credit limit then, because now if I'm putting $1,000 on a $10,000 card, my utilization is that much lower. But again, you're potentially getting into trouble. So, okay, so yes, your credit score may be improved by having a lower utilization, but it could also get really hammered if you end up then spending more, carrying more debt. That throws all your other ratios out. Okay, now I want you to tell me, we've looked at the positives. I increased my credit limit. Maybe my utilization goes down. That helps my credit score. Tell me the negatives then. Because obviously this is debt-free in 30. We're not proponents of debt. That's kind of the opposite of what we do. So give me an example of when it is a sign of poor financial health that you are getting your credit limit increased. Give me some bad stuff here.
Well, if you're using your credit limit now just to pay your everyday bills. So if you're going out and getting that extra couple $1,000s and you're paying all your regular monthly bills, so gas and groceries, and now you're back to making those minimum monthly expenses, that's a bad sign because now you've overspent. You're paying that high minimum monthly payment, the interest only, and you're not getting anywhere.
Have you been to a grocery store in the last? Yeah. It ain't cheap.
No.
And everything just seems to keep going up and up and up. And so it's no wonder that I got to use my credit card because cash is tight. Early in 2023, the food inflation was something like 10%, and nobody's getting a 10% wage increase. So I've got this cash drain. I got to use my credit card to do it. You're saying, okay, but if you are increasing your credit limit so that you can cover those minimum expenses, that's a problem. What other option do I have, though?
Unfortunately, you're in a difficult position if that's the case, where you're using your credit card to pay your everyday bills.
Yeah, your only two options are increase your income or lower your expenses. Easier said than done. Yep. But that's certainly a warning sign that, okay, if the reason I'm getting that credit limit increases because I got to cover my regular necessities, then that's a problem. What else would be a flag for you, a warning sign?
If you're using debt to pay off debt. Now, I mean, sometimes consolidating would be a good idea. If you get a lower interest line of credit to pay off a high interest credit card, that makes sense. But if you're continually increasing your credit limit and moving sideways and just paying off more debt, that's another warning sign, because you're not really accomplishing anything.
Yeah, debt is not the solution to debt.
No.
That's kind of the opposite. And so have you seen that, where someone has a line of credit and a credit card, and okay, I'm using my line of credit to pay my credit card? Is that something you see?
Unfortunately, you see it. I don't know how many times clients tell me that I got this consolidation loan or I got a line of credit to consolidate my credit cards, but the bank didn't shut the credit cards off, and then you kept using the credit cards. And so a year ago, you owed $10,000, now you owe $20,000.
There's the problem.
Yeah.
So nothing wrong with consolidating. Like you say, if you can get a lower interest rate, if the bank is offering a loan at 7% interest and your credit card is 20% interest, great.
Makes sense.
Pay one off, but then you got to reduce the limits on the credit card, shut them off, get rid of them, whatever, because otherwise you can continue to use them. And if the problem was the original point you made, that I'm using it to cover necessities, if I've still got a budget shortfall every month, well, then I'm going to be increasing them. So I'm getting into trouble. So, okay, so covering necessities, using it to pay off debt. What are the other warning signs where we worry that you're increasing your credit limit?
Going back to the wealth effect, you said if you're using your credit cards now to fund a lifestyle you can't afford. So if you get the credit limit increase and you say, hey, we're now going on a family vacation, and you don't really have a plan to pay that vacation off, not a good sign.
Yeah, we all want to take a vacation. But okay, if you're using debt to do it, you've just dramatically increased the cost of that vacation, and you've limited what you can do in the future in other areas. So, well, this might be the year to be doing a staycation or something. Okay, now I got another point to throw at you here. In the old days, so I'm thinking like a year or two ago, so 2020, 2021, 2022, interest rates were really low.
Mm-hmm.
So there was no point in being prudent and saving money and putting it in a savings account, because I'm not earning any interest.
Nope.
So it would be better to take whatever savings I've got and put them in the stock market or real estate or crypto. I'm sure you're a big crypto guy, because that always goes up and I can make lots of money. But we all know you need to have an emergency fund, right?
Mm-hmm.
Got to have an emergency fund. Okay, but I've got a credit card and I've increased the limit to $10,000. That's my emergency fund. What's wrong with that?
Great in theory, but if you go spend that $10,000 on your credit card, you now owe 10 grand to the bank, and you're back to the same problem of how am I paying that 10 grand back? So if it's a credit card and you're paying 20%, that's 2 grand a year. So now you got to come up with over 2 grand a year just to pay a little bit back to the bank.
So you don't believe a credit card is an emergency fund?
No.
Is what you're saying.
It's a false emergency fund.
Yeah. Yeah. And okay, if you've already got some cash in the bank, and I understand if there's some catastrophic thing that happens, the engine drops out of my car. Okay, I didn't save up that much. So, okay, I need that to fix my car or whatever. We understand that. But that should not be your primary emergency fund.
No, I mean, you probably need your credit card in that situation because you're on the side of the road, your car's broken, you need a credit card to get the tow truck, but you should have the cash available to pay that emergency off ideally.
Yeah, or at the very least, okay, I'm going to have to cash in my TFSA or something, but at least the cash is sitting there. So, okay, so it is a warning sign if you're if you're getting your credit limit increased so that you can cover necessities. If you're using it to pay off debt, that's just robbing Peter to pay Paul.
Yep.
If you're funding a lifestyle that you can't really afford, or if you think you are using it as an emergency fund, that's not so great. Okay, then, how many credit cards do you think the average person should have? And of course, you could certainly make the argument that the number is zero. Number is zero. Do you think the number is zero?
No, realistically, 1, maybe 2 seems to be an ideal amount.
So why not zero? Zero means I could never pay interest. I never get into trouble. What's wrong with zero?
I mean, sometimes you need a credit card. You go to a hotel, you need a credit card. You have to rent a car, you need a credit card. If you're shopping online, probably good to have a credit card. But also we talked about the credit side. If you want to keep an active credit history, using a credit card to keep your utilization is a good idea.
But if I don't plan to borrow...
If you don't plan to borrow and you have cash, then maybe you don't need a credit card.
I guess there are places where your credit score matters even if you're not borrowing.
Yeah.
So I'm renting an apartment.
Yep.
I live in the East Coast, and they use credit scores in determining car insurance rates. I don't believe that's in Ontario yet, but who knows? So there may be reasons why, okay, I'd like to have a decent credit score. So having zero credit means I'm not going to have an ideal credit score. So, okay, zero isn't the right answer. Well, for some people it is the right answer.
Yeah.
And if you can get away with no credit card, fantastic. And let's face it, you and I deal with people every day who are going through a bankruptcy or a consumer proposal. And when you file a bankruptcy or consumer proposal, you surrender all your credit cards.
Yep.
That's the deal. It's a fresh start. Everything stops. So, but I travel for business and I need a credit card. So what do I do if I just started my consumer proposal and I don't have any credit cards?
I mean, there are the debit Visa and the debit MasterCards. They're limited in their use, but that would be a good substitute. If you need to on an emergency basis, it's expensive, but you could try doing a prepaid credit card for a short term. But then it might be a good idea to take a look at getting a credit card to reestablish your credit history at that point. Yeah.
So if you're using it, as a substitute for cash, there are reloadable credit cards as well, which is pretty much the same as a prepaid card. With a prepaid card, a prepaid card, I put the money on. A secured card is I put $500 on deposit. I got a card with a $500 limit. And you're right, that's expensive because, that $500 is gone now.
It's a short-term fix.
Yeah, it's a way to do it. And if you have a spouse or a relative or something who's able to get a credit card, put you on as a supplementary, okay, there, I can use it for booking my hotel room, but it's not dependent on my credit. Now, obviously that's not improving your credit score because it's their card, but in the short term, that would be a way to do it. Okay. Now my question to you was, how many credit cards should you have? And you said, okay, zero. If you can get away with it, fantastic. But realistically, for most people, the answer would probably be 1 or 2. Okay. Why 1 or 2?
Well, 1, obviously, if you need a credit card, you have it, you have usage, you can establish your credit utilization, build your credit history. If you're really concentrated on trying to improve your credit score, then a second credit card can help. It's a second active account, so it increases your utilization as well. Past that, though, why would you need more? Yeah, you're asking for trouble. Yeah. And I guess the other reason for a second card is if there's some problem at the bank because the internet went down at their bank or something, then I've got the second one for emergency use. But yeah, if you got 12 credit cards, I would question whether that's the correct number or not. Are there any other circumstances where it is okay to increase your credit limit? I mean, the question I would ask is, why are you increasing your credit limit? And then if you are, what's your plan? So if you have a HELOC and you say, hey, we want to do some renovations now, we know we can pay it off in 18 months, then maybe that's a good reason if you want to get it done now. Other than that, though, if you don't have a plan to pay off any sort of increased credit limit, then really question why you're increasing the limit. Yeah, and I like the word plan because, of course, that's our phone number, 310-PLAN. But it also means you are making a conscious decision. So you said earlier that, I get this thing in the mail from the bank saying, congratulations, we've bumped up your credit limit.
Okay, well, that wasn't a decision I made. That was not something I thought of.
No.
That was just something that happened. Okay, well, that means the bank is the one driving the bus here, not me, as opposed to me saying, okay, I want to improve my credit because 3 years from now I plan to buy a house, so I want to get my credit score higher. So I realize that having 2 different credit cards with an authorized limit of $3,000, $4,000, or $5,000 is going to improve my credit score as compared to having 0 or 1. So I'm the one taking the initiative to do it. Mm-hmm. That would be having a plan. But I also know how I'm going to use the card.
Exactly.
I'm not going to be just, spending everything on it. So, okay, so I've got a plan as to why I got the card and also how I'm going to pay it off would be the huge thing. So, okay. So final question for you then. Do you have any other practical advice or tips on either using credit cards, using credit, raising limits, not raising limits? Actually, I got one question first. Is there ever a time where you should call the bank and lower your credit limit?
Yeah, why not? If you've got a $20,000 credit card and you spend a couple $1,000s a month, I mean, fraud's a real thing, unfortunately. So if someone gains access to your identity and they spend that credit card to the limit, you've got a problem. Lowering your limits that exposure.
Yeah, I agree. And obviously there's the utilization question, but if I never spend more than $1,000 a month, whether I have a $10,000 limit or a $20,000 limit, my utilization's really low anyways. The risk of fraud is there. Obviously, banks have fraud protection, and hopefully you're keeping an eye on your credit card. And if you get a whole bunch of alerts, then you can get it shut off. But I agree, if you have a $1,000 limit, you can't get scammed for more than $1,000, and you're not tempted to use it. So, okay, so there may be cases then where reducing my limit. If I've already bought my house, I don't care about my credit. I'm not focused on trying to artificially increase my credit limit. Why not reduce my credit limit? That can also help you with borrowing as well. Because if I am going to finance a car, for example, and I've got $50,000 of available room on all my credit cards, they may say, oh, you've already got a lot of access to credit. We're not going to give you more. Mm-hmm. Whereas if you reduce it, not to 0, but to some smaller number, that may or may not help. I think the point we're making here is each situation is different. So you got to look at the pros and cons and decide what makes sense for you. Okay, so my final question, this is actually my final question. Any other practical advice or tips for someone to do with, credit in general?
I think it goes back to the basics, is planning. So if you're using credit, what is your plan? How are we paying it back? What's your budget? And we'll essentially get a plan in place to make sure you can maintain and get it paid down. And if you get those those offers in the mail saying increase your credit limit, really ask yourself, why? Do I need this? If I do need it, again, what's the plan to get it paid down?
Yeah, I totally agree. Plan means you're thinking about it.
Yep.
That's what a plan is. And I harp on this and have been for years. A credit card is a substitute for cash, not a way to borrow. So I get it. I'm going to the store. I'm buying that thing for $400. I don't want to carry a wad of, $40, $10 bills with me. Mm-hmm. I might lose them, whatever. So I put it on my credit card. Maybe I can get a couple of points. I don't have to worry about the risk of losing the money, but I go home and I just transfer the money from my bank account to my credit card. It was as though I spent cash on it.
Exactly.
And that way I'm not paying interest. The banks are still making money on your credit card, even if you don't pay interest. They've got that fee that gets charged on every transaction. So I think pay your credit card, use it as a substitute for cash, not a way to borrow. Pay it in full every month. Or in my case, I pay my credit card every payday.
Makes sense.
Now, I've got a credit card that I use for business. We put a lot of business expenses on it. So I would be hitting my limit if I didn't do that. Because again, I keep my credit limit lower than what I would otherwise qualify for the reasons you mentioned. But, it's payday. I get paid every 2 weeks. I get paid every week, twice a month, whatever it is. Why not go in? I got my pay. Let's just clean it all off. Keeps my utilization low. And I never have to worry about missing my payment because I'm paying it twice a month.
Exactly. And then you're not worried at the end of the month of finding that cash when the statement comes due.
It's easy. Payday, I pay it.
Yep.
Simple. Don't have to worry about what day it's due. So excellent. Well, that is fantastic. Once again, Mark Borysiak. Did I say your name right there?
Yep.
who is, I'm looking at my cue card as though I don't know who you are. He is, it says here, trustee in the Hoyes Michaelis Barrie House. Well, I know that. So anybody who is north of Toronto, you deal with people all over the place, Aurelian and all over. So they can look you up on the Hoyes.com website, and you would be happy to chat with them.
Anytime.
Thanks for being here, Mark. Appreciate it.
Thanks for having me.
So there you go. Should you increase your credit limit? Is it a good idea? Well, sometimes it is, sometimes it isn't. Actually do some thinking, make a plan, figure out what is best for you. I will put links in the show notes on both YouTube and on the audio version of this podcast to what we've talked about, including the episode that Mark was on before. So please check that out. And if you are watching this on YouTube, you know the routine. Like, subscribe, share, I don't know, hit all the buttons to get the word out. Obviously, the banks and the credit card companies want you to be borrowing as much as you can. We're trying to give the other side of the story. That's why getting the word out is so important. We appreciate it. There is a new podcast every week. We will be back next week. Until then, that is our show for today. Thanks for listening. I'm Doug Hoyes. That was Debt Free in 30.